Bought these, just bought these, and these too. People, it's an inflation stampede, and the prices of silver and gold are coiled like a cobra, waiting to surge higher. I sure hope you're not waiting to buy more precious metals. Hey everybody, thank you so much for watching Yankee Stacking. I'm buying more precious metals, mostly gold, but also more silver. And yes, I'm doing that even with the crazy premiums. Why? Well, Friday, June 10th, we saw the continuing nightmare of inflation. The consumer price index rose 8.6% in May. Guys, that's the highest increase since December 1981, when 15-year-old Yankee was in his Christmas PJs. And as bogus and manipulated the CP lie is, this was higher than expected and cannot be written off as insignificant anymore. Food prices are skyrocketing. Rental costs, they're rising at the fastest 12-month pace in 31 years. And oil, okay, that's up 106% over the past year. We are seeing the carnage playing out at the pump, especially with diesel. And guys, that runs our supply chain. Frankly, it's no wonder U.S. consumer sentiment plunged this month to the lowest on record. Household finances are being totally obliterated. And I don't care what Janet Yellen said on Thursday, we're probably already in a recession. And the stock market, it's getting rocked. And what's silver and gold doing? Well, people, let's remember what it has been doing all year compared to the S&P 500. Hello? You don't hear that very much on the financial channels now, do you? This is why I'm buying more physical gold, more physical silver, and yes, more shares of gold mining. I already bought shares of this mining company back in January, and I'm buying more shares after this video drops. Many thanks to Gold Mining for sponsoring this video, but I'm going to tell you my frank opinion on them and put more of my money where my mouth is. You see, I firmly believe that we are going to see a decoupling of mining stocks from the overall stock market very soon. I am personally invested in gold mining for the long term because, guys, come on. If the gold I bought in my Yankee Cannon back in 2009 for just $1,000 an ounce does again what it did since then, well, gold mining is going to crush it. And I'm not a professional financial advisor. You do you with physical silver, physical gold, with any speculative precious metals mining company. But I think the odds are clearly in my favor with gold mining over the next 5 to 10 years. So let's ask the CEO of gold mining, Alastair Still, to give us his take on these insane inflation numbers and what he thinks it means for precious metals. Welcome back, Alastair. Thanks for joining me for another interview.
I'm thrilled to be back. It's glad to say that I'm a return customer. I like the venue, I like the platform. Happy to be back.
Thank you. Hey, you know what's hot right now? Inflation. The numbers for May are in, Alastair, 8.6%. And while I'm not in shock, it's far worse than what most market gurus and the Fed expected. What does it mean?
Well, I think really what it means is that the general consumer finally starts to think that, hey, you know, the numbers are matching with reality. We all see what's happening when we go to a restaurant or the grocery store, put gas in our vehicles. And actually, some would say, hey, 8% may not even be capturing the reality of what we're seeing on the street right now.
Absolutely.
But I think it's a big number. It's a headline number, so it's real. It confirms that it's real. But what I think that, you know, the trickle-down effect, and in fact, maybe starting to see that more in the short term and immediate impact, is that I think this is also going to, you know, accentuate points we've made in the past, which is that in times of uncertainty, times of, you know, runaway inflation, people are going to want to turn to those safe havens. And I think gold and precious metals fit right into that sweet spot. I think this really could be the catalyst to start a run on metal price, I can see gold getting to that $2,000 threshold, and from there it just takes off, I think.
This runaway inflation, you really think it's going to finally make a difference in the price of gold and silver? Are we going up?
Absolutely. I think that's my view on it. I think this is just validation. This is ready to pour a little, gasoline on the fire that's going to kickstart the price of gold. And I think there's a bit of a barrier there at around $2,000.
Mm.
We've been hovering in that $1,850, $1,900 range for a little while now. This could just be the catalyst to get us through 2,000, and from there it just takes off.
The stock market, NASDAQ, S&P 500, I think they're in convulsions right now over the perceived hawkishness by the Fed. And I mean perceived, because I doubt they're going to be able to stay the course much longer. They've barely started their tapering and their interest rate hikes. What do you think, Alastair?
Well, I think you're right. I mean, as much as this, the recent hikes in prime rates have impacted things, I think it's just the start. We're going to see more of this. This inflation is a real concern. They're going to really try and put a damper on that as much as possible. Mm-hmm. That's going to take more effort than what they've done already. And I think in that period of uncertainty, as this builds up, as further interest rates are potentially looming, again, I'll go back to safe haven. I want to make sure part of my portfolio is secured in a fixed asset, something I can sleep on well at night, knowing it's still there. Gold, silver, precious metals. It's a great diversification in one's portfolio.
Oh, I love it. Yes, absolutely. I love gold and silver, both. Okay, in my intro, Alastair, I said that I believe there is coming a decoupling of the general equity market and mining stocks. What say you?
I think that's a great point. I mean, we have seen a general, decrease in overall market. Everyone's portfolio reflects that. And the gold stocks have broadly followed the general market trend, which seems to be, a dichotomy to what we just talked about with metal prices.
I know,
metal
right?
prices have not come off 20% or 30%.
Yes.
So there is a decoupling yet to occur. And I think as people get a little more nervous, they keep opening those quarterly statements and saying, wow, what's happened this month to my portfolio? Even better reason to have part of your investment, part of your diversification in the base metals. Mm-hmm. Base metals, precious metals particularly. And that's where I think our company, with such a broad portfolio, 32 million gold equivalent ounces in resources, it's a great diversification of metal, gold and silver, some copper there too, and having a fixed product, an actual finite product, something that you can actually, touch and feel. It's not going to disappear at some point. It's there, it's real, it's in the ground. That is a great item to have in your portfolio, I think, right now.
The last interview that we had, you said that gold mining's properties were, and I quote, a blank canvas. You were just waiting to have their value unlocked. Is that still true?
Absolutely. We're starting to see a little color on that canvas, but I'm liking what I see so far. We've made a couple of key advancements in the last few months. Maybe I'll just highlight a couple of those. The first thing we announced earlier this year, one of our projects in Colombia, we announced a preliminary economic assessment. So that's looking at the resources on the project, putting some economics to it, seeing what could look like if it gets built. And what we came up with there was a net asset value of over $300 million. That's on one project. And remember, we have 11 in the portfolio. So the value of that one project in comparison to our market cap is kind of eye-popping. And we liked so much what we saw on that preliminary economic assessment. We've started something for the first time in our company's history. We've started our own drill program at the project. We announced the start of drilling. There's a 3,600 meter drill program that started at the end of April. We're well underway with that. We have a new VP of exploration running it, a gentleman who has some 25, 30 years experience working with majors, coming in to help augment that discovery. This is not definition holes. This is growth right beside the main deposit, which will have immediate and real impact on the value. It's going to help increase our resources, make the attractiveness to this project to others all that much more apparent. We see the potential, but now this is about quantifying the potential and showing even greater value. So that's just one project. And the other exciting development, amongst many I want to highlight for the group here, especially gets me excited, is I continue to really like what I see in the north, and in particular Alaska. I think it's a great state to be in. We have a very large property there, our Whistler property, and we announced earlier this year, just a couple months ago now, that we are going to take one of our existing assets, the Whistler Gold and Copper project in Alaska, and we're going to spin that out into a new vehicle so we can unlock that value for our shareholders. And I like nothing better than a Made in America story. We're going to rename that U.S. Gold Mining Inc., focus onshore, help create local jobs, and really get that program kickstarted. And we plan to be drilling on that program later this year as well. And our new VP Exploration has been spending time this year. We're very excited by the geological potential of it. We like the climate in Alaska. This is on state mining lands, so there's a lot of pluses for it for development and working to get drilling up and running. We have an existing camp there that we're going to refurbish, get back into action. The state have been big supporters of the mining industry. They've put their own cash on the table. They call it their Road to Resources program. There's $8.5 million studying a road corridor that will go right to our project and connect us to Anchorage. So having access, putting state money to work for us, that's a fantastic win for us. It's a fantastic opportunity to develop those resources and really start showing the true value on that project in our portfolio.
You have incredible shareholders like Doug Casey, Rick Rule, BlackRock, which is the world's largest asset manager. These are companies that are looking at you going, this is what we want to buy, and that's why I'm buying those shares too. That's a great pedigree.
Well, it is, and those companies, you mentioned some good names there. Those are key individuals who do their own due diligence. They look under the cover. They look at the assets. They look at the teams running the companies, which is positive. I think your listeners should be aware of that and know that others are doing their due diligence, because they can't always go to the same depth that the bigger companies can with their resources, but you can rely on those names who are looking at us. And I think one other point that on the finance side and the investor side is, since we last spoke, we talked about how we created value last year, and that we spun out Gold Royalty, and we launched that publicly. And at the time, and we still do, we have over 20 million shares in that company, which is a significant gain on our balance sheet. But what's new there is that Gold Royalty have now announced that they're going to pay out a quarterly dividend. And as a major shareholder, we now are projecting, based on that dividend Gold Royalty has declared, we will be receiving close to $1 million a year in dividend income. So for a junior company to have cash flow coming in from an asset we crystallized last year and close to $1 million, that's a huge win for us. That really helps us advance our projects, and reduces any bleed-on effect where companies tend to just issue shares and dilute their shareholders. This is great. We've got some cash coming in now. So our enterprise value, if you look at it on a gold equivalent per ounce basis, it's absurd. It's close to, probably under $5 per ounce right now.
Wow.
And I'm not saying that, hey, we want to be valued at the highest valuation there is out there. I would pick a basket of companies as comparables. Look what they're valued at, $20, $30, $40, even $50 per resource ounce. And we're valued at around $5. I think it's very easy to draw the math there and say there's a tremendous upside potential.
This is why I decided to become a shareholder, Alastair. And maybe others will consider it too. The ticker symbol, it's right on the screen. It's GLDG. Again, it's on the New York Stock Exchange, not over the counter. So your trading app will probably work just fine if you are interested in becoming a shareholder. Sign up for their newsletter at gldgnews.com. I did a while ago. That's really helpful. Anything else, Alastair, before we wrap it up?
Next week I'll be in Toronto, where one of the biggest mining conventions on the planet occurs, the PDAC, the prospectors and developers. We'll have some further updates for the shareholders coming up as we continue with that drilling on our key project, and a number of other announcements yet to come.
Thanks again for joining me, Alastair. It's been a real pleasure.
Always my pleasure, and I look forward to our next discussion.